You're listening to the Stephan podcast, interviews with the best and brightest in Bitcoin and Austrian economics. Listen in as I interview some of the sharpest minds, ranging from business leaders, software developers, investors, and analysts. Hey guys, it is your host, Stephan, and today my guest is Aleks Svetski. Aleks is the CEO of Amber, an Australian Bitcoin business. They are a digital currency exchange, wallet, and micro investment app. And he's also a technology entrepreneur, having previously built several businesses. And he has been featured in The Age and the Sydney Morning Herald, which for my international listeners are some of the big newspapers here in Australia. Aleks has also written a number of nice pieces on sites such as Hacker Noon. And I recently actually met Aleks at a Jimmy Song Bitcoin Carnivory dinner when he was down here in Sydney. So, I had the chance to meet Aleks, and I thought it'd be great to get him on for an episode. So, Aleks, first of all, welcome to the show.
Dude, thank you for that intro. Awesome.
Let's, as we always do with these Bitcoin podcasts, we love to start with your story in Bitcoin. What brought you here?
Oh, Jesus. Classic. Heard about Bitcoin in the early days, I think through, I can't now remember whether it was Max Kaiser or someone like that, because I was one of the tinfoil hat gold silver bugs back in the day. And I'm sure a lot of us sort of got into it from that sort of angle in the early days, at least, sort of viewing it as something else. And to be honest, though, I didn't actually get involved at that stage. I heard about it. I was like, oh, yeah. I didn't really understand the concept. I didn't read the white paper. I didn't even bother to spend any time sort of playing discovery or anything. I ended up going down the rabbit hole with other, quote unquote, traditional tech businesses. So built some software companies in sort of payroll automation and recruitment automation. The recruitment one particularly was heavily involved with psychology, behavioral science, and all of that, just understanding human beings better and being able to build an algorithm that would be able to place them better and all that sort of stuff. So I sort of spent the few years after the first time I'd heard about Bitcoin going down that sort of path. And I stepped down as CEO of the previous company I recruit in 2016. And part of the reason I'd stepped down was, one, that the culture was sort of moving away from where I wanted it to. But at the same time, earlier in 2016, I read an article. I read now I'm forgetting the blog's name, Unenumerated, I think it is. Nick Szabo's blog. Yeah, that's right. So I read a blog there and I was like, maybe there's something more here. And it was around that time, I think Trump had just gotten into presidency again. I had reopened my trading account. I was like, okay, maybe it's time to sort of get involved in money markets again. And, along the way, started reading a bit about Bitcoin again, started slowly going down the rabbit hole. And it was sort of at the end of 2016 that I really thought, all right, this is the next chapter for me. And, jumped back in, and here I am today. I think 2017 was a crazy year. I think a lot of us also got caught up in the hype. Earlier on in the year, I was like, holy crap, look at this ICO thing. Look at Ethereum, look at all this. At one stage, I was even mining Ethereum. There was a lot happening, and
Yeah, sure. So before we move on, what was it about Bitcoin that made it stick out to you?
Man, first of all, I'm a contrarian at heart. Whenever I've traded markets, I've always been on the short side. Like everything I do is contrarian. Like, so for example, over New Year's and the Christmas holiday break, that's generally when I fast. Most people eat. I go to sleep early on New Year's. I don't care about this. I always do the opposite. And for me, Bitcoin seemed like this really interesting contrarian bet. The more I sort of delved into it. So that was the sort of the first allure for me. Having been a previous gold sort of silver person as well, I understood, the ideas around Austrian economics and all of this sort of hard money concepts, stock to flow ratios and all this sort of stuff. So I understood that inherently. So that sort of came after the contrarian piece. Then the piece that sort of tied it off for me was this concept of how at a mass scale we can achieve social consensus. So I've always been a big reader and a big, student of anthropology, of how societies evolved, I was one of the first people to sort of run around, tell everyone to download or to listen to Yuval Harari's book *Sapiens*. And what I saw in Bitcoin was this grassroots movement, not so much a technology, but this idea that we can agree on something or collaborate or cooperate on something, which is essentially what separates humans from every other species on the face of the planet, is our ability to cooperate in numbers and with people we don't know intimately. And it was this new method of cooperation, and money being the ultimate tool of cooperation, or the ultimate tool of social consensus. As I delved into it more, that was the thing that sort of really hooked me and drew me in further. So everything else obviously still stands, but just this study of, hey, we've got a new way for us as a species to cooperate, to collaborate, to communicate, to transfer value, to do all that sort of stuff. I find that extremely, extremely fascinating.
Yeah, exactly. I think I have some similar views there, especially when you think about articles, and this is a very classic one, which is Nick Szabo's Money, Blockchains and Social Scalability. I'm sure that one was quite influential for you, wasn't it?
Believe it or not, I actually haven't read that one yet.
Oh, really? I'm very surprised by that, because
I should definitely read it, dude. I've got this to-do list on my phone, which is articles to read. So that one is actually on there, along with another 86 of them that I haven't caught up with yet.
There's never enough time. Okay, so let's talk a little bit about the last year or two. We've had this insane ICO craze, and actually one of the articles you recently wrote, which is titled "A World Full of Blind Excesses." Talk a little bit about that.
Well, where do I start on that? A world full of blind excesses. I mean, I wrote that when there was a couple things that triggered me actually when I wrote that, and it's related to the crypto space. It's related to the world in general. And one of them was the whole thing about Kylie Jenner being a self-made billionaire. I was like, this is ridiculous. The other thing that triggered it for me was people complaining about, bloody Donald Trump and everything that he does. And everyone's just lost their damn minds and just complaining about everything. And then looking at the crypto sort of space in the lens of just the world gone mad, that we've got nothing better to do but to complain about everything and to make everything bigger than it is, and building, flaky shit on top of flaky shit. And for me, the ICO craze, like, I got swept up in it in the beginning. I thought, holy crap, it's a new way to raise money. This is going to change the way, the whole narrative that was around it, right? It was going to change the way people raise capital, and, everyone's getting involved. And I bought into the narrative initially. I was like, holy shit, this is amazing. But then I remember what changed it for me was I started seeing all of these crazy ass ideas. And I'd studied a little bit of the .com sort of boom bust cycle. And when I looked at that, and I thought, holy crap, there's got to be similarities here, except this seems extraordinarily more stupid. So I sat down and I took a weekend out and I read 20 white papers. And having been involved in tech before and in running proper businesses and raising capital through sophisticated investors, through angel investors, through VCs, through all of that sort of stuff, reading the white paper, I thought, holy crap, not only did by the end of the weekend I felt like I'd lost 20 points of IQ, I couldn't fathom how people were raising that much money on a piece of, I don't know if I can swear here, but a piece of crap.
Yeah, go for it.
A piece of shit then, concept, which the grammar wasn't even correct. The ideas were complete fluff. There was no business model, no concept, no nothing. And it was insane. And I sat there reading this stuff thinking, all right, the world's gone absolutely fucking mad. And this is an example of people don't know where to put their money anymore. They don't know what to do with it. Everything's overinflated. We've been running around and we've reached the peak of, human stupidity, where we've decided to create, drone-powered AI blockchains that wash your clothes and make money for you in the middle of the night without you having to do anything. And God knows what other fucking ridiculousness was coming out there. And man, looking at it, it's an example of when people say, oh, the world's gone mad in terms of political correctness, where everyone's now getting offended by Friends and getting offended by whatever other old TV show from the 90s and all this sort of stuff. I say that this is all a subset of capital excess in the world, where people no longer have real problems to worry about. They have these superficial, flaky, surface level problems and crap to deal with that they end up creating more and more of that shit. And the ICO craze was an example of that in applied to technology and applied to just blind zero substance ideologies that occur at periods of time in society where we've overinflated, whether it's expectations, whether it's capital, whether it's assets, whether it's anything. It's just we live in a world that's been completely inflated in every way, shape, or form. And I mean, that was the premise of the article. And, if anyone wants to look at it, I just go on a massive rant and I pick out 50 things which I think are completely insane. I'm looking at it now, like, property porn shows and, everyone's a startup person now. And, everyone's also apparently an investor now, stay-at-home traders.
Yeah, let's dig into some of these. I think definitely around this whole ICO craze, we saw this whole idea of everyone's being a fund manager now. Do you want to talk a little bit about what you saw during that 2017 crazy ICO run?
Well, people who've never been in markets before, people who don't understand anything about economics or any fundamentals about markets or companies or how money functions and how society functions or anything, all of a sudden became fund managers because they tripped over and either fell on top of Bitcoin or fell on top of Ethereum or popped their money into some bullshit shitcoin that went up 10,000% because it could. These people all of a sudden became fund managers because their track record was 6 months long or 12 months long and they made 10,000% return. And in a world where capital is looking for somewhere to make a better yield because everything is skyrocketing like crazy, it's going to go to, hey, look, there's this new stupid area which is making tens of thousands of percent. We'll go into there, and then all of these idiots who shouldn't be anywhere near money or anywhere near funds raised money from people looking to get a better alpha somewhere else. And I mean, it was like we will never until the next .com type or ICO type bubble comes along, and maybe that's going to be another 10 or 20 years, I don't know, but I don't think we're going to see, like, people keep talking about what the next wave of crypto is going to be. It's not going to be like this ICO round unless we have some type of new similar type asset class that's created that's not tied to the underlying asset, where you can completely overinflate it. I don't know. Maybe I could be wrong, but I mean, it was nuts. I don't really know what else to say there, man.
Yeah.
Like, there's most of these fund managers are not fund managers. They're a bunch of kids who got lucky, or a bunch of idiots who think they know what they're doing. So that they're all, and I mean, how many of them are under? Like, that most of them are under, right? I think there's only like a couple of the fund managers that are still up after all of this, after the bloodbath, and they think, it's not going to get worse.
Oh yeah, exactly. Yeah. A couple thoughts there. So one thing people are saying now, and I don't know the truth of this, is this whole idea of STOs, and are STOs going to be the new ICOs? Do you have any thoughts on that? The security token offering.
I was on a panel with a guy called Kevin O'Hara a couple months ago, and it was just when it was in July, right? And it was when people were first starting to feel the burn of ICOs crashing and everything coming down, and they were like, oh, you know what? ICOs are stupid. So the narrative started to change then, right? So all these idiots who'd previously been involved in ICOs were now sort of starting to say, oh, look, well, we're not doing an ICO, we're doing an STO. And I'm sort of sitting there thinking, I was on the panel, I'm like, why the fuck are you doing an STO? Why do you need extra liquidity at your stage in the business? So I've got a couple issues with this whole STO thing. And so if we break them up into buckets, number one is the liquidity problem. I don't think people understand liquidity well enough. When you're an early stage company, there's a reason why companies like Uber, Airbnb, and all this sort of shit remained private for as long as they possibly can is because they need to build, innovate, and play the fucking long game and not bring liquidity into an entity or into an organization before it's needed. Because the problem with liquidity is that, and this is exacerbated in markets where you've got information asymmetry, is that liquidity is a double-edged sword. If you are a small business that decides to go somehow, let's assume that they figure out how to make STOs practical. Let's say you're a small business and you go create liquidity in the stock in your company and you sell it out. You, in a small business or a small organization, you're so busy fucking around running the company, hiring staff, firing staff, losing people. It's fucking chaos in the early days. I don't give a shit what anybody says. Your ability to report on what's actually going on and being able to report honestly would send the price of your tokens, up and down on a daily basis, so much so that you wouldn't be able to run the actual company effectively. You'd lose your fucking mind, number one. Number two, the average small business or small organization, and when I say small, I mean anyone from, really 500 employees down, can't deliver or execute on the compliance and that's required in order to be what's effectively what an STO represents is a listed company in effect. Like, in order to give the information out there to the public to make decisions that can value the token that is, tied to the security and, whether it's your company, whether it's equity or whatever they've done. So you've got all of these input problems. That means the perception of the value is going to be so distorted by the market and then further exacerbate the information asymmetry, therefore further compound the problem of liquidity in that sort of market. So I think that is one area where it's a complete disaster. And number two is that it's not solving the underlying problem of allowing more people. So I like the narrative of the ICOs was that anybody can invest in early stage companies. Now, that's a nice narrative, but just because you've created an STO, so let's say, again, we've solved the problem, we've somehow created an STO, non-sophisticated investors still can't invest in this early stage or, pre-seed or seed stage companies anyway, because, and depending on obviously the jurisdiction that you're in, but it's very difficult to invest in these companies from a legislative and compliance standpoint. So where the innovation needs to happen is not in, digitizing or tokenizing the security in, companies that are too early to go and list effectively, is we need to change the laws around sophisticated investors and all that sort of stuff. So that was sort of the point that I bring up at the when I was a panelist over at that crypto investment summit in Sydney, was that the problem we need to solve there is more a legislative access problem than it is a technological problem. The technological piece, we've got, I mean, that would be probably the third pillar or the third area that I think STOs have a real problem, is that what are we actually doing? Are we creating synthetic tokens that represent equity or, some other right or debt or obligation in a company? Or are we actually going to digitize a corporate constitution, break that up, turn, what's currently listed on an ASIC register, for example, the shares that are listed on an ASIC register, we're going to transform those into some form of token that people can then share, swap, and trade. So I think there's so much gray area, and there's a lot of people running around thinking that they've solved it, but they're not really thinking deeply, particularly on the liquidity problem. I think the liquidity and the information asymmetry is going to be a major issue. And that's just all we're going to do is create bubbles in areas that we don't need them. Then the technical problem, and then you've got the legal problem. So I don't know. I think it's a very messy area. Although in saying that, I think there's going to be progress made towards making the process of creating liquidity in businesses that require the liquidity and have the capacity and capability to, report and remain compliant. I think it's going to potentially make it easier for them to effectively list. But anyway, that's my long answer on STOs.
Yeah, no, I think there's some very great insights that you've offered there. Let's unpack that liquidity problem a little bit, because some of the problem with that is essentially that these tokens, when they first issue, there might be a fair amount of liquidity for people who want to buy in. But then 6 months down the line, 2 years down the line, what kind of liquidity will there be?
When you say, okay, so where are you referring to as the source of liquidity in this question?
I'm referring here more to things like the amount of buy support. How many people are there who actually want to hold that token?
Yeah, well, we don't know exactly. So this is the problem. So the reason why, for example, BHP is listed on the Australian Stock Exchange and not the National Stock Exchange or some other alternative stock exchange is because the liquidity. See, things like liquidity work best when you've got networks or marketplaces that are large. That this is why Uber, for example, works much better than, I don't know, GoCatch or whatever one of the other smaller competitors are, because they've got liquidity of drivers and liquidity of riders. It's almost like buyers and sellers, right? So it's BHP is listed on one of these because of that, buy sell side liquidity, but they can also list enough shares or enough stock because they're a high valued company. Now, if you're a extremely low valued business that's small, that's looking to get some cheap capital by somehow securitizing your tokens and listing them somewhere, first of all, you need to worry about who the hell is going to find you. How the hell are you going to get enough information out there for people to actually have enough context to be able to, buy your stock or support your stock, and that sort of translating into a market building around your company or around your entity. So I think a lot more thought needs to be going into this. Now, if we can't, so if we assume that those challenges are real, what's all this STO thing is going to represent is probably some sort of layer that sits just beneath where traditional markets, public markets, sit at the moment, right? So this STO thing might actually be reserved for businesses that have done a seed, a Series A, a Series B. They might not want to go public on a market the size of the ASX or say the NASDAQ or something like that. They might not want to go to the Russell or the National Stock Exchange, for example, in Australia. They might want to go to something intermediate that that is run by a more sort of private, smaller scale exchange, and that might give them access to some sort of liquidity. But again, that kind of company is not going to be your average, figured it out last week startup that wrote a white paper and is going to raise all this capital overnight. It's going to be very different to do an STO. And I just think the analogies that people draw between the ICO craze and the STO craze are two completely different things. And it's not going to be as free, open, liquid, and to the moon as people are imagining. It's going to be a lot more complex, and there's going to be, if it's going to function, the barrier to entry is going to be a hell of a lot higher, which by default is going to mean that less companies get through, and it's not going to be the same type of craze. So I don't know, they're sort of my thoughts.
Well
there.
said. Okay, and another area that you touched on in the article that I think would be good to get your thoughts on now is this whole phenomenon of crypto traders that we saw. These guys who just started trading yesterday and are trying to become professionals. What of these guys?
Yeah. Well, I mean, what were they doing before crypto? They were probably trading, doing Forex fucking courses, because that was the craze. Or was it binaries? I don't know. There was binary options or some shit before crypto. So, look, these guys are always going to exist. You've got two parts of the problem there. You've got people who think that they should, make money for doing nothing or sitting at home and looking at charts. And it's been proven time and time again. Like, there's arguments for and against this, that charting and technical analysis actually works or whether it doesn't work. I mean, some of the greatest mathematicians out there will tell you that the shit's all random. You can't get an edge anymore from TA. Like all the quants and all of that sort of stuff, the real hedge funds, like the people like Ray Dalio and Jim Simmons and all of those guys who actually run proper hedge funds with proper quants and all that sort of stuff, those guys have arbed out all of the edge that you'll ever get from TA. And they're running complex mathematical statistical arbitrage models and all of that sort of stuff that actually consistently makes money, not some stupid chart patterns. And the argument, on that side is that you could basically draw a chart pattern out of anything, and convince yourself, that it means something, because we as humans all have cognitive biases that that dictate, how we operate in life. So, I think it's pretty foolish to think that, you can become some sort of professional trader at home. Now, in saying that, there's obviously people out there who are trading, who are making money, and, all credit to them. But I think what they should be careful of is, that there might be some sort of convergence around TA in crypto, at least at the moment, because it's such a nascent market, and because of the high saturation of retail noobs. There may be technical analysis consensus points, or Schelling points on charts that actually function. But over time, and this being a natively digital asset, I don't know how well that's going to work, and I don't think it's a good long-term strategy to really make money in the space. But again, I think a lot of these people are studying crap that everybody else can access freely on the internet. That's not how you get an edge. I can guarantee you that's not how the best hedge funds in the world work. They don't get an edge by, studying a 5-wave Elliott pattern and thinking that that's how you make money. So, it's a hell of a lot more complex than it's made out to be. And then, the people who just want to make money easily are willing to pay, moron traders who became traders last week, selling courses, and they'll buy courses off these guys just to for the promise that they'll, hopefully make money for free sitting at home trading on BitMEX.
Yeah, precisely. And I think it might be similar to the phenomenon, even with things like poker, where it's really only like the very top few percent who actually consistently make a decent amount of money. And pretty much everyone below that is either, if they're lucky, they're treading water, and otherwise they're losing.
Yeah, absolutely, man. Like it's just, trading is such a zero-sum game, man. And it's also one of those things, like, I do know a couple traders who genuinely are good, but guess what they do? They spend 12 hours in front of a fucking screen every day. They study, they read, they have a pulse on the market. They know what the fuck's going on, and that's what they do. If you think you are going to make millions of dollars trading part-time because you paid for some douchebag's course, cost you $1,000, and he taught you how to read an Elliott wave, or what the hell a candlestick is, and what an RSI or a stochastic is. If you think that's how you're going to make money in your part-time, you're kidding yourself. Like, it's a joke. It's pissed me off since the days of all the guys running around shilling, Forex courses, to binary options courses, to now crypto trading courses, to God knows what else they're going to shill next. It's the same shit, and it's the same kind of people that keep buying that stuff. That, my suggestion to all those people buying the stuff is, go do something productive, and you'll have a much better chance of making money long term. Or here's something even better: is buy some Bitcoin, put it in a fucking ledger, and forget about it. Come back to it 10 years from now. You'll have saved a hell of a lot of your hair from falling out. And, more than likely, it's Bitcoin being an asymmetric long-term bet. It's going to still be around and be worth a hell of a lot more. And yeah, it's a much better strategy than all this other crap.
Right, yeah. And so with that, we're seeing really over the last few years, well, now 10 years that Bitcoin has been around, and in the last few years we've seen sort of the good and the bad. And the bad could be some of these people who are selling you this false promise of you can get rich quick, and overnight experts, armchair experts. And then we've seen the good. Do you want to talk a little bit about some of that?
Some of the good stuff, mate. I would say that the thing, like, in the last year and a bit, we've seen, like, Andreas Antonopoulos has always been someone that I look up to, and I've always listened to his stuff, and I think he's one of the most important people in the entire space, because he brings a voice of reason, a voice of trust, which is what you need when you're dealing with something that is effectively going to be a new form of money, or a new form of social consensus. The predicate behind that, or the predicate beneath that, is this feeling of trust. And you build trust through communicating things that make rational fucking sense. And that's what, what's his name? Andreas Antonopoulos does. What I've been, I guess, really happy to see over the last year and a bit is, people like Seyfedin Amos, who came and wrote Bitcoin Standard, and all of these sort of, there's been a couple good new players that have come out. And when I say new players, I mean, they've probably been involved for a little while, but their work sort of come to the fore recently, like Murad Mahmudov. His stuff is brilliant as well. There's more good stuff coming to the fore where there's people who actually understand why, what the best chance or what the best opportunity for something like Bitcoin is. And they're starting to explain it. And it seems like, and I don't know if you've sensed this in the last probably couple months, is that there seems to be a movement back toward Bitcoin now from a lot of the community.
Yeah, that's definitely what I've seen. I think we've seen well, a lot of the traders kind of explain that as, oh, well, look, the odds are crashing, but then, Bitcoin dominance rises, which, I mean, I disagree with the use of the Bitcoin dominance index, but you can sort of colloquially understand that's what's happening.
Yeah. So it's, I think the good is that aside from, good new minds coming into it and sort of putting more resources out there and more content out there that makes sense. I mean, your podcast is a great example. Jimmy Song's stuff is brilliant as well. So there's a lot of good content that really makes the space feel more trusted. So that's sort of coming. One thing as well is I did a presentation at a pitch event when I was talking about, when we were raising some money for Amber, and I talked about, why crypto and why now. And one of the things I talked about was how the size of the marketplace or the size of the cohort of people getting involved in this space is growing by an order of magnitude, every couple of years. So it started off with, the crypto anarchists and the, all the freaks and geeks in the beginning. Then it's sort of the next cohort of people was the, early libertarians, your gold, silver people, your people, understood, money and all that sort of stuff. Then the next cohort was probably the, the techies and the engineers, and that was sort of an order of magnitude larger than the previous one. And then the next cohort was sort of the cohort that just went past, which is the, the speculators, the get rich quickers, and, the scammers and all that sort of shit, which, despite all the bagging out I give them, they're all just part of the process anyway. And what I'm envisioning is that the next cohort is going to be a lot larger, and it's going to be far more sort of, young, savvy, millennial, retail sort of driven, because it's, this is the Lindy effect in action, right? Is that each time a new cohort of people get involved, it's making Bitcoin in particular, it's making its existence, more, what's the word I'm looking for? More substantive. It's a recursive, it's a positive recursive loop. And, for me, seeing things like, I'm obviously biased toward what I'm doing with Amber, but there's a hell of a lot of cool new projects out there, companies that are trying to make, the holding some Bitcoin or accessing the space easier and, more seamless to do. And that's sort of like, I remember watching a video from Andreas a couple months ago, and he sort of talked, people were like, oh, what's next in blockchain? What's next in Bitcoin? And he said, look, I'd love to tell you that it's going to be some new AI drone powered super blockchain, blah, blah, blah. He goes, but it's not. He said, there's three things that are important. It's better on-ramps, to allow people to get into the space easier, better infrastructure, a wallet, so that you can send, swap, receive, you can do things, so it allows you to do things more seamlessly once you're inside. And he said better education. So when I remember watching that video, and that was sort of around the time when we, had first started building Amber and doing all that sort of stuff. And I said, holy shit, that's the three things that I want to nail with Amber. Better on-ramp, better infrastructure, better wallet, better usage, better interface, better user experience. And I think those are the sort of things that I see coming up. And then the third thing that I want to sort of touch on as a major positive as well is Lightning. And I think, I'm doing a talk right now that I'm sort of starting to put together, which is going to be probably the highlight talk for 2019 for me. It's called Blockchain is Dead, Long Live Lightning. And I think what we're going to see, and again, I'm a massive Lightning bull. I think all of the complexity that we have in society today is going to be abstracted out into different layers that anchor back into the core Bitcoin network. So all of these crazy ideas and all the stupid shit that we saw sort of last year and this year with ICOs and different blockchains and all that sort of stuff, somewhere in those crazy stupid concepts there's actually some good ideas that do not require their own blockchain or their own token or any of that sort of shit, that will be applications that are built with some level of complexity and abstraction, either on Lightning, through Lightning, or something to do with fucking Lightning, that get the benefit of a immutable ledger, i.e. Bitcoin, through being able to be anchored to it. And I think this is where the future's going. And I was looking at a talk by Elizabeth Stark with Suna from Token Daily, and that was like a really good talk. Listening to her talking about what they're doing with Lightning and all that sort of stuff, and I think this is where the next major opportunity is in this space. And I think over the next 5-10 years, we're going to see the next cohort, or the next 2-3 cohorts of people being Lightning users and less, core, Bitcoin chain users. And I think that's sort of where I think, the future is. And I think that's one of the biggest positive things that are going to happen to Bitcoin, because what it's going to do is it's going to create another network effect that makes Bitcoin more important, more secure, more entrenched, and more central to this whole thing. And the more I look into it, the more bullish and the more positive I get on Bitcoin overall.
Excellent insights, Aleks. I very much agree. Let's talk a little bit about what we can expect for the next, say, 2019 and 2020. Now, you touched on this a little bit earlier around what might, we've got this sort of phenomenon of people coming in waves. As each different wave kind of comes in, they get, so to speak, mentally captured, as one of my prior guests, Vijay Boyapati, explains it. And you touched on this idea of maybe the savvy millennial. So what might drive some more Bitcoin investment? For example, the disillusioned millennials who can't afford a property here in Australia, would they then go and buy Bitcoin?
Look, I don't know whether the first thing they're going to jump at is Bitcoin. I think in down markets, people generally run to cash, right? Because when people are scared, they sell shit, they run to cash. When people are euphoric, they buy shit and pay for it even though it's overpriced, and then wonder why it fell down in price later. So, human psychology is a funny thing. But what will drive them toward Bitcoin, I think, is this narrative around it being an asymmetric bet. I'm literally, before you called me, I was just writing an article that I'm calling Bezos and Bitcoin, which is, and the idea is what's similar about Jeff Bezos and Bitcoin. And it's a bit of a clickbaity title, but the idea is that the internet was this fringe outlier asymmetric bet that I don't think we could even quantify how much of a economic impact it's had on the world. And Bitcoin is also this fringe outlier, technology movement, communication medium, whatever you want to label it as, that we, for the first time in history, have the ability to hold a piece of. And I think the narrative for the millennials, and the narrative, well, at least what I'm trying to push, with Amber and with everything that I talk about, is that Bitcoin is one of those things where it's either going to be worth nothing or it's going to be worth orders of magnitude more than it is now. It's not going to fall somewhere in the lukewarm middle. That's just not what's going to happen with something like this, because the only way for it to function is if it's worth trillions of dollars. Otherwise, it's just going to be worth zero. It's an all or nothing game. And there's I'm sure you've heard of Nassim Taleb, but his new book Skin in the Game, where he talks about hidden asymmetries in daily life. He made a very interesting point in there, which is all of these new age moron fund managers who think they're fund managers, who've been in the game for a couple of years and create all these complex fragile ways to try and get yield. He goes, if all of them just pissed off and you just take 85% of your money and just put it in treasuries so that it's safe and you're earning 2 or 3%, and you take 15% and you buy out of the money options that have the potential to return 100 or 1,000x, He goes, that's your best portfolio structure. You don't need anything fancy. So if we look at Bitcoin with that lens and say, all right, Mr. Everyday person, millennial, whatever, you've lost, a bit of money or whatever, here, hold most of your wealth in, cash for the time being. But here is this interesting asset. It's fringe, it's out there, it's weird. But hey, it's got a chance not to double, but to go up 1,000 times. Take 5%, 10%, 15%, whatever. It's an option on, a future that could be a hell of a lot better. Take an amount that you're willing to lose potentially, but that, would make a difference if it, went up 100 times or 1,000 times, and allocate some capital there. And I think that narrative is what's going to drive a bit of the next wave of adoption into Bitcoin particularly. Now, I could be wrong. This could be a real biased view from me because this is probably one of my cognitive biases, but it's definitely the narrative and the message that I want to push forward with everybody that I'm talking with, moving forward. I honestly think that everybody should hold a little bit of Bitcoin. Simple as that. I think it should be a non-negotiable. Everybody should hold some Bitcoin. Again, it's the whole reason why I built Amber is that it's going to make it easier for everybody to hold a little bit. So
yeah, no, that's great. Let's now go into Amber. So, I mean, you were touching on it just now, but why did you start Amber?
I mean, that was it. So the story was really around. I was trying to over 2017. I bought a big chunk of Bitcoin at the beginning of the year, and I was very happy about that. Especially when it hit 3,000, I sold 50% of it, thinking that just doubled my money. I'm a genius. And the prudent ones didn't fare too well last year.
Yeah. Underperformed during the crazy bull run. Yeah.
Correct. But, one of the things I was doing was trying to convince everyone, friends, family, and everyone to just go buy some. And, they're like, oh, fuck, what's this? I take photos of myself and this and that and all this other bullshit. And everyone was just finding it too hard. And then they didn't know how much, or, some of them bought it at $5,000 and then it crashed back to $3,000 and then they were fucking angry at me and all of this shit. And I was like, man, there's got to be an easier way to do this. And, looking at the traditional markets, Acorns had obviously done it for traditional markets, being able to put your spare change into a traditional managed fund. And I thought, man, why has nobody done that in crypto? I said, the concept seems so simple. And as I delved a little bit deeper, I realized why nobody done it in crypto is that, the business model for Acorns is, they're running a managed fund, so they charge a percentage on the fund and all this sort of stuff, which is all great, and that's how they make their money. Whereas can't really do that in the Bitcoin space without running a fund, but I didn't want to go down the path of running a fund and then have to build a technology layer to, acquire the capital effectively to run that fund. I thought, this is all bullshit. So I want to run this like an exchange. Now, to run an exchange, you need to make a small percentage, right? So you're going to give me $10 worth of dollars, and I'm going to give you $10 worth of Bitcoin minus some, 1, 2, 3% exchange fee, whatever. And then that's how I, as an exchange, subsist. So in order to make that type of business model functional, the math needs to stack up. And where the whole thing broke down was the cost of processing transactions and aggregating the financial data from the banks in order to work out the spare change amounts and all of that was too high. Like if you wanted to do small transaction amounts and work out, the roundups and do all that sort of stuff, by the time you moved $2, it ended up costing like 60 or 70 cents. It was ridiculous. So there's no way you could, make money as a business. And if you just passed that cost on to the customer, it was a mess. So anyway, long story short was I got together with a couple tech guys from here in Brisbane, and they built a piece of fintech software. It was financial data aggregation and payments and all that sort of stuff rolled into one, and it was the missing link that would make something like Amber commercially viable, so that A, I could run it as a business, and B, we could provide that service into the market for people to use. And that's sort of where it all spawned. And my whole MO on that was that I wanted to just pure and simply make acquiring some Bitcoin as simple as possible. And the more I delved into it, the more I realized that dollar cost averaging is the most, and this is where, when people, the original message for Amber was, making digital currencies easy, like making the purchase easy. and what I'm sort of evolving the message in Amber to now is making, investing or dollar cost averaging easier, because by far, Steve, like I think, oh, sorry, Stefan, I think the only way that 99.9% of people should invest is through dollar cost averaging. If they want to be involved in an asset class that they believe is going to increase in value over a period of time, they should definitely not be traders, because that is basically a zero-sum game. They should try not to be, shorter-term investors. They should just, over time, purchase a small amount in, periods of time that are, equidistant apart, so they can take the emotion out of investing and trading. And slowly accumulate the asset that they want to hold, whether that's Amazon, whether that's Netflix, whether that's Apple, whether that's the NASDAQ fund, the index fund, whether that's Bitcoin or whatever the hell else they believe in. That's what all people should do over a long enough period. And again, tying it back to Bitcoin itself, is I see Bitcoin as the most asymmetric bet of our generation. And if somebody can dollar cost average in with money that's low risk, it's an absolute no brainer. Like when I did my first market studies, really, all I did was I walked up and down Queen Street Mall in Brisbane, and I just asked people. I would say, "Have you heard about Bitcoin?" Yeah. Do you have any? No, I don't. Do you know where to buy it from? Not really. Do you know how much to buy? No idea. Do you know what to do with it? Not really. Can I pay for things with it? And then the final question I'll ask is, would you swap, your spare change for it daily and just accumulate it slowly? The answer, bar none, from everybody was, yeah, I'd do that. That's no problem. So we're solving, like with one app, we're solving multiple problems. We're solving the ability to acquire it. We're solving the investment problem and the problem with human beings, and inherently buying high and selling low, which we did backwards. We're solving that, and we're solving the asymmetry problem by investing your spare change, or by investing in a small amount, whether it's $20-$50 a week or $100 a week. It's inherently not taking all of your money. It's not the 85% of the barbell, it's the 15% of the barbell, right? It's the option. So it's solving those three problems, and it's setting it aside. And, at Amber, we manage it. All the funds are in cold storage, so there's no risk of hacks. There's no risk of losing the funds and all that sort of stuff. So it's sitting there for you, nice and safe, through a mechanism that takes all the stupidity out of, your potential actions, and lets you accumulate into this new asset class automatically. It's like, I don't know. I just feel like it's the application that needs to be there to get this into more people's hands.
Right. I see it as, any hardcore Bitcoiners, they know how to go and get it themselves. This is really more for the, not so hardcore people who just want some exposure to Bitcoin, but they don't necessarily want to, go and do all the work and do all the reading and research. They just want some small exposure. Could you talk a little bit about how the app works and kind of the mechanics of how you set up?
Look, the app, I'll touch on two things quickly there. First is around the hardcore users. So originally, when I first started building this, I would publicly say, I go, this is not for your existing Bitcoin people. The people who already have Bitcoin, know where to buy it, and they know what they're doing. And I go, they're definitely not going to use Amber. Mate, we launched a beta version, which is sort of live to a couple people plus us in the office. Since I've downloaded it, I've been actively, trying to buy odd amounts when I'm in the store, just so I can accumulate more. And I'm like about as hardcore Bitcoin as you can get. And what I've found myself doing is, using the app myself to accumulate, because it just, and again, I could be biased here, being the founder of this thing, but it feels like this is actually a cool tool for even the hardcore Bitcoiners, because this is sort of the amount that they can, this is the Bitcoin stash that they can build up without noticing. Whilst they go and, obviously build up their primary stash elsewhere, doing whatever else they're doing. But that's just the funny thing that I've sort of encountered in the last couple of weeks, as I've launched it amongst myself and a couple other friends who are also hardcore Bitcoiners. So it was a really interesting, finding. But
Right.
Coming back to how the app itself works is the first version. So we'll roll it out in versions, but effectively there's 4 functionalities that you'll have in the app. You'll have what's called the roundups. And what that means is you'll download the app, you'll link a bank account to it through this Fabric service. Then every time you go and spend money in a shop, whether you go buy a coffee for $3.50 or you go buy a sandwich for $7.20 or whatever, at the end of the day, Amber sees your transactions throughout the day. They see the amounts, and it just does some math. It rounds up each transaction to the nearest dollar. So that $3.50 coffee that's up to $4.50. Then the $7.20 is 80 cents there, and whatever other transaction throughout the day. It'll add those up together. It'll say, all right, $2.26 for the day. It'll then direct debit $2.26 from your bank account, and we'll do that across say 10,000 users. So that's $22,600. We go then purchase that Bitcoin, chuck it in cold storage, and then we attribute that Bitcoin across to everybody's Amber wallets, basically. Now, so I'm going to explain this a couple levels. So that's sort of purchase modality number 1. Purchase modality number 2 is recurring investments. So that's where you can say, look, I don't give a shit about roundups. I just want $10, $20, $50, a week or a day or a month just coming out of my account. And buying Bitcoin at whatever price it is, doesn't matter. So that's a recurring investment that you set up. You don't really need to link your bank account to it. You can just set that up as a direct debit. Or should you prefer to link your bank account, the service that we use, Fabric, is uses smart direct debit. So it'll only debit your account if you've got enough money in there. So avoid dishonors and all that sort of stuff. But effectively, that's like an automation strategy. Then there's this thing called the boost function. And what that allows you to do is that allows you to sort of accelerate that savings process. So you can add $1, $2, or a $5 boost. And that basically means to every transaction. So if we go back to that coffee transaction, you spend $3.50, we'll round it up to 50 cents. But if you've also got a $1 boost, it'll add $1 to that. So that means for that transaction, we calculate $1.50, then the sandwich $7.20, we'll round it up to $1 plus add $1 to that, so that's $1.80. So it's a way for you to sort of fast track the
accumulation.
The accumulation. And then number 4 will be just one-off top-ups, and that's literally just like an exchange buy-sell. So you'll just be able to go in there, click buy, and the fact that Amber is connected to your bank via Fabric, we can debit the account straight away. So it'll actually be one of the fastest ways to buy crypto. So longer term, I really want to put some focus into being able, to allow people to, perform that function as easy as possible. So we want to introduce some, voice activation stuff where you'll be able to say, hey, Amber, what's the price of Bitcoin? Hey, Amber, if the price is under this much, can you please buy some? So we'll introduce some cool features like that longer term. But, that's sort of, I guess, outside of the scope of this initial conversation. But that's sort of the feature set in terms of accumulation. Then when we talk about the wallet layer and things like that, the first version, the early version of Amber will be pretty strict in the sense that we're going to manage the custodianship for people, because the market, again, that we're after is people that aren't worried about private keys and seeds and don't know what the fuck any of that stuff means. And to be honest, even if they did, custodianship isn't their forte. So because we are effectively a buy-side exchange, we have the luxury of being able to allocate 100% of the funds into cold storage. So we have different levels of cold storage. We have like deep cold storage, which has, sharded private keys across the country and all that sort of stuff. And that's where we hold 80% of our funds. That's never touched. We have 15% of the cold storage, which is in, local vaults. And then 5% of it sits on a ledger, which is still cold stored. But we have the ability to access it should customers wish to, withdraw or sell, perform that sort of function. But again, that first version of Amber is more about accumulating. In a subsequent version, which I don't know whether it'll be ready for Q1 or Q2 next year, is we're going to release a unique Amber wallet, so that each user of Amber can actually, the Bitcoin that they've accumulated, they'll be able to send, receive, and actually have a hosted type wallet functionality. And then longer term, which will probably be later half of next year, we'll build what's called the Amber Vault. And the Amber Vault will allow people to move the crypto from their just normal Amber wallet to their own Amber effectively wallet, which is their own custody solution, i.e. their own private key, their own seed and all that sort of stuff, which we anticipate only a small proportion of customers are really going to use because, I don't see mass adoption from the next cohort of users coming from people that want to hold it for, the same reasons as a lot of us early people want to hold it for.
Right, I see.
And
Yeah, go on.
I was just going to say that's sort of the key trajectory between those two things. And the wallet functionality for me opens the door for us to then move into how we're going to build sort of the Lightning functionality into it long term, where we're going to look at opening up reverse opening channels for people, so that way they have a pre-funded Lightning wallet in their hand through Amber and the ability to we'll manage those channels from our end. And so there's a lot of things that I want to do, particularly in the Lightning space longer term. Again, it's on the roadmap for later. I don't exactly know how it looks at the moment, but it's the trajectory through which I want to take Amber.
Yeah, definitely interesting, that idea of having the same thing that you buy it on then also help you get onto Lightning.
100%, yeah. That's sort of my I'm going to say this and probably get shot somewhere, but that's my Trojan horse, right? Is that I want to get, if I can help 100,000 people buy Bitcoin, and then I can, reverse engineer their access to Lightning and make it, such that they don't have to do anything for it. I've put 100,000 people onto Lightning, and that's sort of my, one of my, I'm not going to call it the end game, but that is one of the big drivers for me, is because that's going to then start to activate that Lightning network, which is what I think we need to do for Bitcoin long term.
Yeah, that's fantastic. And I know in Brisbane there's a whole scene there, and there's the whole thing around Brisbane Airport accepting Bitcoin, and there's that town, I forgot the name. Is it 17? I forgot the name of it.
Yeah, it's
I forgot it, but yeah, basically there's a town in Queensland where pretty much every vendor takes Bitcoin, so that'll be cool to see.
It will be amazing to see, exactly. But look, merchant, the whole merchant thing, like, I don't want to go down on a tangent here, but I think that's important, but it's still early days on that. So, and this is why, like, part of me, wants to jump on top of, Lightning and get involved and start, allowing people to process transactions on Lightning and do all that sort of stuff. But I always sort of temper that and pull myself back and say, fuck, hold on, Aleks. We still have not got a 15% of people in the world actually holding the shit. So first things first, let's get some people holding some Bitcoin, and then we'll worry about spending, transactions, exchange, and Lightning and all that sort of shit later. But let's first get people into the damn thing. So, and that's why, I always need to remain strict on my, goal and focus, which is, let's just make this the easiest on-ramp in the world for anybody to buy Bitcoin, and do it inside, under 60 seconds from first downloading the app to linking their account to being able to purchase. We want to do that in under 60 seconds.
Yeah, fantastic. I think you've got to walk before you run, so that makes a lot of sense to me. Look, we're coming close to the hour now, so maybe we'll just start wrapping up. If you've got any closing thoughts, Aleks, and also just tell the listeners, or at least the Australian-based ones, how they can find Amber and how they can get in touch with you.
Sure, man. Well, I'll start with the Amber piece there, and then I'll add some closing thoughts. So with Amber, it's, .coms have all been taken and everyone's squatting them. So you need to look up Get Amber, so GET Amber.io. Hopefully at some stage I'll be able to get amber.io or getamber.com, but that's a work in progress. Otherwise, you'll be able to find us on Facebook. I think it's getamber.io on Facebook. We're on Twitter, Amber Exchange. Not really too big on Twitter, but that's an area that will sort of build up. But yeah, if you jump on the website, that's obviously the easiest place to find us. As at the date of this recording, we are still in a private type beta, looking to have a more public beta out in July. Sorry, Jesus Christ, not July, January. So that's sort of around the corner. That we'll be working hard on that from next week on. So that's how people can find out about Amber. I do a lot of writing on Hacker Noon and Medium, and I'm always talking about dollar cost averaging and, asymmetric bets and outliers and, why Bitcoin and all that sort of stuff, and always sort of loop in what we're doing with Amber there. So there's definitely information people can find out there. And then for me, closing thoughts. Look, Stephan, I think I'm, like I said before, I'm really optimistic about people in the space coming around, and we're all sort of converging back toward Bitcoin. I think this year now is going to be an incredible year for Bitcoin, for Lightning, for all of that sort of stuff to build out. I'm in two minds about the whole ICO and altcoin thing. I don't think we're going to have another ICO type craze, but I definitely think we're going to have another altcoin boom, purely because the speculators aren't all gone yet, and we're likely to have another wave of stupidity. But I don't know if it'll happen in the same way as last time. I think it'll be more sort of altcoin, cheap coin driven than it will be ICO stuff. So people, confusing the fact that one Bitcoin is worth $5,000 versus one Ripple is worth 20 cents, and hey, maybe Ripple will get to $5,000. So I think that's sort of, that's just going to be inevitable. So I think we're going to have an interesting 2019. I don't think, we've hit the bottom in terms of price yet. I still think we've got quite a way to go. But at the same time, I think from now and over the next 6 to 12 months is the best time to start dollar cost averaging, and whether people use an application like Amber or whether they're disciplined enough to do it themselves. I think that's one of the hardest bits is, something like Amber removes the need for you to have to discipline yourself to do it. It just automatically accumulates the shit for you. So, but if you are disciplined enough to do it, I think now's the time to slowly start purchasing Bitcoin, and every time it gets a little bit lower, keep going. Because I think, as I said, it's the best asymmetric bet of our generation. And yeah, I think we need to see more content like this, more conversations like this, more podcasts like yours, and more conversation around what makes sense in this space. And yeah, man, that's sort of what I'm looking forward to in the year ahead and in the years ahead. And definitely looking forward to doing, another one of these catch-ups maybe 6 or 12 months from now to see how things have actually evolved.
Yeah, sure, definitely. All right. Look, I think that's a great way to finish it off. I think it's a message of dollar cost averaging. And look, thanks very much for the chat, and thanks for coming on, Aleks.
Really appreciate it, Stephan. Thanks, buddy.
Check out the show notes for this episode on my website, stephanlivera.com. If you enjoyed it, remember to subscribe so you don't miss out on the next episode, and please share the podcast with your friends. You can also follow me on Twitter. My handle is @StephanLivera. Thanks for listening.